If you have an IRA or 401k, then you already know investing is scary. But watching your money disappear is worse. With investing, you're putting your hard earned money into something you can't see or touch, hoping it'll grow. But when there's no guarantees, what can you trust? You're about to find out the real reason why smart Americans and wealthy investors are turning to gold. Because what if the stock market crashes? What if the housing market crashes? What if the entire economy implodes? Nobody wants to see their investment go down in flames. And that's why it's so important to watch this entire video before getting a single ounce of gold. Now remember, with investing, short-term drops are normal. Same thing with gold. But it doesn't mean gold is a bad investment. In fact, over the long term, it has been steadily increasing in value, and when you invest in gold, you're giving yourself the chance for long-term success. And once you understand how each factor plays into the price of gold, you can make a more informed decision about why now is the right time to invest. The gold price, supply versus demand. Gold is no stranger to supply and demand. You can watch its price rise every time people want to buy more of it, but you'll be surprised when you see why it happens. Factors behind gold demand. Gold is a valuable resource, but it can be difficult to understand its worth and use. For too long, gold has been seen as a mysterious resource only accessible to the super wealthy. But today, with online trading and an ever-growing global market, anyone can buy gold. That's because gold is more than just a precious metal. It's an investment that could protect your money from inflation and offers stability in uncertain times. And you'll be shocked when you see who spends the most money on gold. Gold investment demand. Every year, about 80% of the gold people buy is for jewelry or investments. The amount people want to buy usually goes up when the price goes down, and goes down when the price goes up. But every now and then, something unexpected happens. The price can go up because people are worried and they want to keep their money safe. They'll even buy a lot of gold even though it costs more. And it could get even more expensive. Right now, there's so much demand for gold that there aren't enough coins to go around. And if the demand for gold increases during a recession, it's possible we may run out of gold. But before you run out and buy as much gold as you can, you're going to want to see the best kind of gold to get. Gold coins and bars. Now that investing in gold is no longer a well-kept secret, gold coins and bars are increasingly becoming one of the most sought-after methods for building wealth. With a certain mystique around them, these timeless assets have become an indispensable way to store value, giving savvy investors more reasons than ever before to jump on board. But with gold prices soaring, it can seem nearly impossible to gain access and become an investor. More on that in a moment. Because the real power behind this precious metal lies in its density, making it incredibly easy to transport vast amounts of wealth through a small pocket or purse. As demand rises further, so will the prices on gold coins, pushing investors towards other forms of this lucrative asset class. If you're considering investing in gold, now is one of your best opportunities yet. And if you're already a gold owner or looking to sell your coins, get ready for great news because prices should look good for you. But many suggest not selling yet because of one very compelling reason. Gold exchange traded products. Did you know that owning shares in an exchange-traded fund, ETF, doesn't grant you the ownership of any physical gold? This means it's not possible to convert those shares into real precious metal. But hold on, there's more. Some investors have even raised questions about whether or not ETFs are really owners of all the gold they claim. Shockingly, these doubts don't stop people from buying and selling through this market, meaning their trades can still affect the price of gold itself. Many are curious to hear the real reason why. Industrial gold demand. And though you may not think of it, gold is used for more than just jewelry and financial investments. Surprisingly enough, industrial applications like in electronics play a minor role when considering overall demand. But don't be too quick to count out Mother Nature's glittering gift. With market conditions as they are, gold might surprise us with an unexpected boost in demand that could skyrocket its price. Gold jewelry demand. For example, there's no question that gold jewelry is an icon of luxury and exquisite beauty. But what you may not know is it's also a powerful tool for building wealth. India has long been renowned as the largest consumer of golden adornments, especially during their wedding season when members from both families give away precious metal to mark their union. Believe it or not, many temples in this part of the world are sitting on immense piles of pure gold riches gifted by faithful followers. Drivers of gold supply. Ever wonder what it takes to produce 10 ounces of this luxuriously shimmering gold? You might be surprised. On average, 60 tons of rock or more are mined to yield just those 10 glorious ounces. But finding and mining gold isn't as simple as we like, which is what makes it so valuable. Gold recycling. But did you know the biggest secret in gold supply may be hidden right under your nose? That's because a whopping 30% of yearly gold demand is met with recycling. So if you've ever considered melting down some old jewelry or salvaging metal from an old computer, now is the time to act. It turns out these small recoveries can make big differences when it comes to keeping up with global gold demand each year. Who knew such a treasure could lie within our reach all this time? Long-term trends in gold demand. But for those in the know, there's an exciting secret about gold. With recession and inflation looming on the horizon, its demand skyrockets. This was seen during stagflation of the 1970s, where annualized growth peaked at 30% per year. So while it can be hard to predict long-term trends for this precious metal due to fluctuations in price-altering user demand, we could certainly see a historical repeat play out once again. But even more stunning, investing in gold could become even more popular if the price increases over the next decade. Jewelry demand would most likely drop as a result, but investors may be drawn to gold's potential for growth. Long-term trends in gold supply. Decades of stability in the gold supply may be coming to an abrupt halt. If current trends continue and mining can't keep up with demand, prices could rocket even higher than ever before. The time may be now to acquire gold if you're looking for potential financial rewards down the road. Long-term gold price forecasts. Get ready to discover a big secret about gold. It's an investment proven to pay off in the long run. With its strong history of being used as money, financial security, and inflation guard, it's obvious why experts agree you can count on higher returns with gold over 50 years. But for those looking for short-term gains, predicting just how much further up prices might go is still uncertain. So if you're looking to safeguard your investments, Goldco has a secret weapon. With over $1 billion in gold and silver placements, thousands of customers have benefited from the decade-long expertise that our experts offer. Whether it's for protecting against rough economic times or diversifying your portfolio, let us help making buying gold an easy and secure process so you can rest assured knowing your valuable assets are safe.